Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Sunday, January the 29th, 2023. Well, Globex were opening a little bit softer, but that could be anticipated as the way we left off on Friday was the markets began to sell off. I think what we're seeing right now is just basically how larger firms and the trading firms and individual traders are all coming out of Friday's expiration. So they're just quickly making some adjustments in preparation to how they want to approach tomorrow. Now, diving right in, I'm going to start with the S&P. I'm going to start on the daily. I am still fairly, not going to be, I'm going to say fairly certain, I'm just fairly satisfied with the count as it is in terms of the labeling. And that is that I did switch it last week in terms of that on an intermediate degree, putting the intermediate second wave back in process versus being complete at 4180 here in the S&P. That instead marks the completion of the minor A wave of intermediate 2. Minor B wave was again at the 22nd of December. On that low was the minor B wave of intermediate wave 2. That puts us in the C wave. A minor C wave consisting of 5 waves of minute degree, of which here on the daily we can already count minute 1, 2, 3, and 4. That puts us in that final minute 5th wave up to complete the minor C wave and in turn the intermediate wave 2. So coming down to here, we can see there's the 1, 2, 3, 4, and now we're in the 5th. As best as I can count what's going on right now, it would appear that we have 1, 2, 1, 2, 3, and this is a 4. Now, let's start adding our Fibonacci so that we can start to wrap some parameters around all of the entire move. The first one I'm going to put up, of course, is going to be our extensions for wave C. I had them up before, but I'm going to just reinstitute them now because we needed to look at what was going on. We don't need a bunch of Fibonacci in there to kind of cloud up that picture. So first thing we put up, what can we expect from the balance of the minor C wave and in turn the intermediate wave 2? Right now, we still haven't gotten to this 50% level, which is at 41.27. Friday's high being, let me get down there and touch it. Friday's high being 41.09. So we got above 4,100 and then we slid back down below and then continued to move lower with the close on Friday being 40.84. So we saw some initial selling right away. And again, that is against expiration on Friday. Some quick adjustments on stock as traders came out of that expiration. Then, if I can keep that count, and we're going to bring it back down to the 1 hour, we're going to continue to add. So what we're looking for now is for minute wave 5. So again, that relationship is minute 5 to minute 3. So we're going to start by putting in our extensions for minute 5. And we've got some wrapping around to 41.27 to 41.32. Then that would be resistance. And maybe that does then complete the 3rd wave. We get another 4, and then we start up again on that 5th wave. And then we have 41.51, but we still now have a little bit of a double here at 42.02 to 42.07. So again, that 4,200 area remains in our very near-term picture. Now, as we know, Wednesday of this week is Fed Day. And so what's going to come out then, I'm feeling fairly certain is going to be our short-term catalyst one way or the other. And so I spoke more in depth about that in the Eye of the Storm podcast, which I did publish earlier today. So if you want to catch up on that, I just recommend go ahead and going over and taking a listen. It's all right at the beginning. So you can take a listen to what I have to say about that. Now, as far as economic numbers, nothing tomorrow. We really don't have anything. But then on Tuesday, we have employment cost index, Case-Shiller. Both are green, not looking for too much out of that. Chicago PMI, employment cost comes out at 8:30 Eastern. Case-Shiller, 9 a.m. Eastern. Chicago PMI, 9:45 Eastern, also green, but may have a little bit of info, a little boost here one way or the other. But what can move the market and comes out at 10 a.m. is consumer confidence. I would suspect that the reading here is likely maybe going to be show an improvement in consumer sentiment. I don't know for certain, but I would think that if we're going to be asking investors and people coming into trade, they're probably feeling pretty positive about everything. On Wednesday, we have PMI manufacturing at 9:45, ISM manufacturing at 10 a.m. That's a market mover. Construction spending also at 10 a.m. Jolts at 10 a.m. Then we have the FOMC announcement at 2 and the Fed chair press conference at 2:30. On Thursday, jobless claims, productivity, factory orders, all at 8:30 Eastern. And then Friday, employment situation. That number, the Friday number, is the one that I think will trigger one way or the other, either a continuation of a slide lower, or maybe it will produce one on that particular day. I think the employment situation continues to prove or show inflation is yet upon us. So those are the economic numbers. The big one, of course, being Wednesday with the Fed decision of what they're going to do. Again, I talk in depth about the expectations from what the market is doing and how that may be a false narrative or just the narrative going in. So back to our hourly chart here on the S&P. And so what I'm trying to put together is just what's going to be the path. I think we will probably end up somewhere here on Wednesday. So I think we'll be all finished with this fifth, because I believe that we will get our clear view on what's going on from that Fed announcement and the first of this year of 2023. So if we're not, I think that we can continue to basically just inch our way higher and then maybe spike and then die. I have no idea, but we'll see how it all plays out. Initially, I'm continuing to look at this as 1, 2, 1, 2, 3. This is a 4. We'll go up, make a new high above what we did on Friday, complete our third, and that is a sub-minute wave 3 within the minute wave 5. So these are all very small moves, but still very powerful in terms of the territory they're covering. So we can get up there, probably just break above 41.11, maybe get as high as 41.27, complete the 3, pull back in a 4, go back up in a 5. And whether that does take us right into Wednesday or whether we're able to complete this on Tuesday and then just mull around an area a little bit up and down on Wednesday, we'll wait and see. I'm not truly expecting a whole lot of fireworks, although from current levels, a good 100-point rally could produce some fireworks. But in terms of a massive move or a massive turn, I'm not necessarily seeing that until we get that Fed information on Wednesday. If we complete this and we then get the turn, then we're being presented with a different picture. And if all that happened prior to the Fed number, we will be getting a very, very different picture. So we'll wait and see, let the market tell us. Right now, I'm looking for a continuation to the upside. I'm looking for some of these resistant levels to be met and have it drop down in another 4 and then run back up in a 5th wave, which will break into its own 5 as well, as we've now seen pretty much in all of this ending stages of this minor C wave and then the intermediate wave 2. Moving average wise, we're in pretty good shape for the markets to continue to move higher. Everything remains in alignment after Friday's trade and even coming in to today's start. And as we can see now, the markets are now moving higher. The S&P, after initially opening lower, is again now heading higher. So, well, we could maybe have already finished that little 4th wave and we're heading up. Over in the NASDAQ, NASDAQ is going to be telling us that pretty much the exact same story. And what we have up here, if I just take this out, let's go back out to the daily chart. And what we've got, I've left up to what the expectations for wave C, right? The minor wave C, what that could look like. So right now, we continued, we got a nice close above the daily 200. And that then occurred on Friday. Then first the break gave us a little bit of a boost. The fact that it's still holding up, giving us a little bit of a boost right now. Instead of continuing to take it down, they are bringing it back up. We're just up 25 now, So I think we're going to see a little volatility until we get the Asian markets open in about an hour and 45 minutes. And then we have the European markets, of course, later during our night. So ultimately, same deal. Within this minute wave 5, best I can count it, 1, 2, 1, 2, 3, 4. We're going to get a 5. Now, let's start to take and layer up some fib extensions. First one we'll put up is not that one. We're going to go and try to get it right pretty much where we want it. There we go. And to the top of 3 down to the bottom of 4. Now, these are for the C wave. 0.618, where wave 5 would be equal to 0.618 of wave 3. It is pretty common, and that's at 12,382. Beyond that, we have 12,492. So here in the NASDAQ, we do kind of gap a little bit in between. So we could get some fireworks from the NASDAQ, but that's nothing new. NASDAQ has been handing us some strong fireworks in both directions, and so I would anticipate that that's going to last until we at least know what the Fed is, and then I think that's going to bring us some serious movement one way or the other. Now, once if we can get down here, if this 2382 or 12,382 finishes up the subminute wave 3, then we're going to look for another 4, which again will likely bring us right down to where we are now, right? If we get up there that completes it, we're going to look for the 4th. We're going to look for wave 4 to find its support in the 4th wave of 1 lesser degree, and that's going to be right here. So again, we're not looking for a whole great deal of movement. We're going to go up, we're going to come back, and then we're going to go up again in that 5th wave. So what can we do now? We can start to add that we can add for that. We can't actually add any more right now because I don't have that 4th wave. So I could take it from here to go up to the 3rd, down to where that 4th was, and then look it up. But and what we would be looking for there is for that same type of a move. We're going to, I have no clues yet as to whether this small 4th wave is complete. It began right off of after the market reached the highs on Friday afternoon, and then what we saw coming off from there, and then again a little bit more today. So if that's our high, and then we've got A, and maybe this is a B, and then we get a C, and again we can expect likely it could drop to 12,185. That's where the 30-minute 20 is sitting, and then we have this channel line actually, or this trend line, which runs all the way from the all-time high straight down and going through the various highs on the way down, the June high, the March high, the June high, the August high. And so that would come in and probably provide some support at 12,170. I don't necessarily want to see it to come down and start breaking below 12,100 right at this moment, because that's going to start to turn the table on what actually is at play, because we have this as wave 1, and I would probably hopefully try to stick to the overlap rule. And then because I feel if it starts to really start to break down now from here, then we should be just dropping, and I can put completion point there. We're that close. So if not, we stop here. We're going to get that 5. Maybe it'll bring it up to 12,382. We get another wave 4, and ultimately I continue to look for at least 12,492 up to 12,600. We have 12,594 right there, but 12,600 seems to be should be a fairly strong area and provide us with enough resistance to put the completion point in. We will be breaking above, and here again, we need to break above 12,300 and then above 12,331 to have wave C get above wave A. So both in the S&P and the NASDAQ, we've not done that yet. I am still expecting that to occur before the C wave is complete. Is it 100% required? No. What would take priority over that would be structure. And if we can complete 5 waves up for our wave C, then that's going to take priority over whether or not that C wave broke above wave A. But I would definitely be looking for 12,382 as a minimum and that to complete it. That does take us above. And it's a pretty clean fib in terms of relationships between wave C and wave A. So that's where that comes in, and it's actually a little bit tight. That comes in actually for the 5th wave. And so it would be the 5th wave against the 3rd wave, and that fits, and then it also would fit in terms of the C wave over the A wave. So that level, 12,382, could be a completion point. We'll have to wait and see. Let's see how the market all reacts, what the market wants to do. And then, of course, we have our Fed number on Wednesday. So moving averages here, I'm just looking at the 4-hour chart, seems pretty strong. Everything's heading up now. Now the 50 is actually heading pretty strongly higher. And the 200, it's turning, it's catching up. But these all these are lagging indicators. They're just showing us that the trend for right now is still up. But then it has been for a while, and as we complete the C wave. Once we turn, they will turn as quick. If we get a quick turn from any of these levels and a strong enough turn, we're going to see the 8, the 4 hook and move lower, the 20 hook, start to move lower, the 50, the 200 go flat until then they start to break, and then we get them to start, line up in alignment for the market to continue to decline. Longer term, I continue to look for this for a intermediate wave 3. Since I've now delayed it, switching around the count, I'm looking for an intermediate 3rd wave. Let me just clear up some of these fibs so we can take a peek at the actual structures. Once we get this done and I put an intermediate wave 2, it is looking that way. The alternate count, which, by the way, has not necessarily changed, it's still there. And now, since I used my other alternate count to switch this around, this now moves up to the alternate view status, the first. And that would be that we would be moving the primary wave A over to what I have marked as intermediate wave 1 down. And that would suggest then this B wave still has much more to go and is still in process. But again, A, B, and we're in a C wave. So how much more? To tell you the truth, I think we have a few of those higher numbers. Let me put that back up. If I put up our C wave fibs, in case it does go up there, we do have 1.618, 13,758. That certainly breaks that level, not by a whole lot, but it does break that level. And then 13,920, that could move the B over. And if that's the case, folks, here's what I really need to get into everybody's head. Whether this is an intermediate wave 2 or whether it is a ABC to complete a primary B wave, this would just turn into intermediate wave A, intermediate wave B, and we're in an intermediate C wave under the alternate count. Both the preferred and the alternate count are highly suggesting that the market will collapse. Either it's going to collapse in the start of a primary C wave, which I think will be much, much more destructive over the long term, mid to long term, than an intermediate third wave. We will get into that as we get up and then get closer to Wednesday. I'll start to review some of those scenarios for a downside move. That's where I'm going to leave it for today. Again, for tomorrow, I am continuing to look for this up move to continue. I believe we will hold upper levels. First of all, we have AMD reporting on Tuesday. I'm not sure. I don't have any of the bigger stocks reporting tomorrow. The biggest I have is AMD, which does not mean that there aren't some. I don't have them all on my watch list. So, but the major ones, the heavy hitters, are the terms that carry highest weights in our indexes. We have AMD on Tuesday, and then of course, Meta on Fed Day. So it could be a wild Wednesday, it could be a wild Thursday, where we have Amazon and I believe one other Amazon and Apple, two on Thursday. That's where I'm going to leave it. Our next update will be on Monday, the 30th of January.